Hey guys, let me know if you can hear me. Hello, hello, hello. Remove this big mic. Safe to say we all need good news, man. I tell you, I agree. I agree. You guys all can hear me then, right? Oh, I have an echo. Okay, I have an echo. Interesting. Okay, let me. This is why I should have logged in a little earlier, but I prepped something really good, guys. So let me go ahead and let me see. Why is there an echo here? So I'm gonna just mess with the settings here really quickly. Stereo echo cancel. I clicked on the echo cancellation, but default. Hello, hello. Is this better or is it the same? I don't hear an echo. I'm gonna go ahead and cancel the echo cancellation. Maybe that's what's screwing me up. No echo now. How about now? We're good. Are we good? Okay. I want to make sure everything's same. All right. Good. So that's good. You guys can hear me. This is good. Uh, All right, all right, that's good. That's good. Okay, good. And you guys can see my picture here, everything. All right. So first off, let me. This is the first time. Let me just decrease the volume here so you guys don't hear the Discord. This is the first time I'm doing a live stream for Clover Health, and so this might be a little choppy in the beginning, but over time I will definitely get better. Again, if you guys don't know me, my name is Al. I've been investing for 10 years. I have 10 years of experience in both fundamental investing and technical analysis. But I'm really new to YouTube. I've only been on YouTube for about 6, 7 months. Yeah, no, hell yeah, no, I agree. Hmm. Clover is definitely an undervalued stock. I mean, we're getting to prices that we're looking at a price at around near Wish, and I would tell you Wish is nothing compared to Clove, right? People are comparing the two. So I think what we're experiencing right now, guys, is very simple. It's almost like a SPAC.com bubble crash. And we've seen this play out before. People back in the 2000s, early 2000s, they said, you know what? Uh, Amazon was a very terrible company. They made fun of a lot of these people, and now he's one of the wealthiest people on this planet. So grab a beverage, sit back, enjoy. We have a lot to discuss. Also, if you guys have any questions, put them in the chat. Right? So that's definitely uh, people that are holding shares. They understand. I mean, at this point, people understand the value of the company. I feel like the short-term investors have gone away, and I have numbers to prove that. It's unfortunate that this is happening. This happened this way, and I'm going to, guys, give you some data that unfortunately is not accessible. This data cost hundreds of thousands of dollars, and it's not fair, but this is the world we live in. So, luckily, through the Fair Use Act, we can have an educational platform where we can talk about these things, and we can educate the public about it. So, without any copyright problems. So, first things first, for my course members that are on here, just to give you a brief understanding here. So here's a TA chart. We have the upper VWAP, the middle VWAP, and the lower VWAP. Here is the 180-day moving average. This is the 1-minute time chart. I have a couple of lines here. I know it looks like spaghetti. We have the EMA, the SMA, and different time points of the SMA. So, I use this when I day trade, when I feel like day trading. I'm more of an omni trader. Those top short squeeze stocks. Today we did really well on Indo. We set out an alert way back when, and we just got over 90% returns today. So that was really incredible. But as you can see here, we're just bouncing on this VWAP here, and the this channel here, and it's honestly not doing much. But if you go ahead and we zoom out to the 4-hour and 180-day, from a technical analysis perspective, the reason why a lot of retail investors have been selling out is because the 180-day directional SMA line, guys, it's been dropped here. And actually, let me go in and just come right here. So a lot of investors started piling in near this area in November. People thought we were going to break out. And honestly, I thought we would too, especially here as well. But if you haven't realized, every time we are about to break out to a point where they release amazing earnings, we've always been shot back down. And a lot of analysts has, I believe Cohen the clown, I call them, they really have done a number on this stock, and they've been publishing a lot of unfortunate things. Like if you remember back, the Hindenburg is when the short selling firm, which is now being investigated, which is, again, that's not on the news a lot, right? They brought down the stock price using allegations that unfortunately were inconclusive to what's happening. So anywho, a lot of momentum traders have left. And once we cross this 180-day directional SMA line, expect momentum traders to come back in. We are already starting to see a curve up on the MACD, and we're definitely oversold on the RSI. I mean, these are just stupidly laughable levels. And I believe these next earnings on tomorrow should at least have some short-term movement. However, with the current market conditions, I'm not expecting much yet. Exactly. So we're going to actually go over that. Yeah, honestly, I have another course member. He's on Al Stock Alerts. He's also holding 100,000 shares. We have a diverse community, and I'm definitely holding a significant amount, as well as my family as well. So we're definitely holding a heavy chunk on this, and we're continuing to buy. And I'm going to be showing you guys some SEC filings right now to show you what big money is doing. So I have a couple of indicators that you can't find online. You have to pay for them. So, but again, we can use them here because of the Fair Use Act. But I'm going to go ahead and close this down because I don't want it to slow down my live stream. So now that we went through the kind of the TA chart here, I don't like to spend too much time because it's just charting. It's boring. I want to talk to you guys about what the hell has retail been doing. We're going to go ahead and discuss about the Trump just briefly. It'll be political suicide if Biden does this. Biden's already dealing with a lot. I don't think they're going to do this. I'm a medical student at the University of Arizona College of Medicine, Tucson, and Banner Health, which runs the hospital that I work on. I work out there, and they sent out a letter as well to the Biden administration, essentially telling them, hey, please don't cancel this. I mean, think about it. Hospitals have already been through a lot right now, guys. And if you're going to go ahead and cut that revenue from them, it's not going to be good, right? But we're going to go over that. In terms of retail, if you look at the order flow data, guys, as you can see right here, small retail investors have been outflowing more than they've been inflowing. In fact, even medium. Large, you don't really see much here, right? And we're going to talk about dark pool as well, what's been going on with that. And, these are all things that it's an unfortunate market we're in. If you don't have the data, you don't know this. So Robinhood ain't going to do it for you, or Webull. But as you can see here, there are more investors that are in the small ratio. They're piling out of the stock. They're literally coming out. And it's funny because if I made a video on February 13, okay? And VC and PE, for people that don't know, this is venture capitalists and private equity firms. Retail investors were the knight in shining armor of this stock. I mean, guys, you guys took ownership of the stock. You guys knew exactly what the value was. Some of them came in because of the short squeeze, but it's unfortunate, right? It's unfortunate because look what happened to retail. They've shrunken down from 52% to 39%, guys, okay? And if you look at institutions, they went from 14% to 22%, and this is actually now it's increased. It actually went from 14% as of today, I checked, to 27%, okay? And what do you think happened to retail investors? They've sold. They're giving away their shares at a lower cost. And I mean, it's what kind of business? This is not business. This is emotional trading, right? VCs, venture capitalists, have doubled the amount of ownership they have in Clover Health. All right. And let me put this mic down here so it's not covering my face here. VCs have doubled. And it's unfortunate because if you look at the individual insiders, they haven't bought any. And you might say, well, why isn't Chamath not buying? Well, if you guys follow the All In podcast, which I listen to every week, it's Chamath, David Sachs, and a lot of these great investors. And I really think they're going to outcompete CNBC and Jim Cramer, who's a clown, I think. So we'll definitely talk about the whole PR thing and whatnot. So that's, guys, if you guys have any questions, pile them in, and I will love to go over them. So essentially, one of David Friedberg, who's really good in the science arena in terms of genetics and whatnot, asked Chamath, well, why aren't you buying, essentially more of your companies? And Chamath said, I can't. There's a limit. There's only so much I can own. And that's why we see individual insiders stagnant. We haven't really seen a change, but you can see institutions are just buying up what retail can give them. Before, when Clover Health was at a higher price, you basically, what we saw was retail held it at around $18, $19. So I'm going to give you an example here. Retail, these people here that lost, they just gave away $1 billion worth of stock for $144 million. Over $1 billion. I'm going to repeat that again. Retail bought stock in Clover Health at around $1 billion worth when it was hovering at $18, $20. And they sold at a loss, and they sold a stock that's been disenfranchised by the fundamentals of the business for $144 million. Okay? So it shows you that this doesn't make sense. It's like they're donating all that stimulus check money, this is why I hate to say this. There's a difference between a rich mentality and a poor mentality. Okay? If you don't understand the business, don't buy it, right? Most people think, they buy a stock, and we go over this in our courses. What is fundamental analysis? What is intrinsic value calculations and all these other things? But as you can see here, guys, retail has been selling, and this is sad. If you look at this, right, this is what hedge funds, so margin calls as well, exactly because they over leverage themselves. So, I'm definitely buying the dip. We definitely own a significant amount of Clover Health, a significant amount, and we are continuing to buying, and I'm going to show you right here So I collaborate with a former hedge fund, and it's sad because if you look at this graph, I'm going to explain to you this graph, okay? So this is the SPX, right? And if you can look here in this area right here, you look at the blue and the red. Blue is higher and the red is lower. But do you know what they call the red? They called the red, if you can look right here, they call it dumb money, okay? They called the red dumb money, okay? This is what they called the red, dumb money, And I hate to call my fellow retail investors dumb money, but this is the reality. They call us dumb money, and the smart money is buying. These are smart money to dumb money confidence ratios. And essentially what we're seeing here is that retail dumb money is selling at a loss and smart money is buying, because they understand that when the stock price drops, it doesn't actually mean most of the time that the fundamentals of the business have changed. Like, you guys know my stance. Like, I made a video about Peloton when it was $50, $60. I said, no, it's a terrible stock. CEO is garbage. They don't know how to run their business. The CEO is not vigilant. I gave a $30 price target, and look what happened, right? So if we look at here, guys, we can see that smart money is buying. Here's another one called the equity hedging index, okay? So when this number is higher, it means that we are about, I'd say dumb money equals impatient. Exactly. Unfortunately, that's what it is. People are impatient. They got used to, and I don't want to get political here, they got used to the Donald Trump presidency, compounded by the money that's been printed by the Federal Reserve. So the Federal Reserve is pulling back right now. They're about to finish off their taper next month, and they're about to increase interest rates maybe 6 to 7 times this year. And all of these revenue multiples that have been propped up, like, for example, Palantir and all of them, they're all coming down. Jumia, they're all coming down. What do you think their operating margin? So we're definitely going to go over that once they release their earnings and my projections and whatnot in regarding to where we're headed in the maturity level of Clover Health. But honestly, I don't really see Clover Health maturing anytime soon. They're focused more on growth. In fact, someone asked a question here regarding, let me just go down here really quickly, about the PR release. So why have they not released PR? Okay, so I know this company's been around for a couple of years, but you guys have to understand, when you report with, like, when you go into the stock market and you have to report your financials every 3 months, that's extremely stressful. Also, the first reporting, this is kind of, think of this as like the first reporting of the year. This gives a pretext of what Clover Health is going to experience for the next 20, the rest of the year. So this is a lot of pressure for them. So they're focused on this. At the same time, they're coming in and they're attacking markets that have been essentially controlled by Humana. Another one that we're going to be talking about, an article that was released as well, which no one talked about. Everyone was a blip, and then no one cared, and everyone focused on Donald Trump and the whole Medicare and Medicaid problems that we've been having. And in this video, I wanted to kind of smooth things out before the earnings report, give you my idea of what's going on. So this is the equity hedging index here, and what we're seeing here is that it's on the contrary, that once these components start to come back down, it is actually a sign, this peak here is actually a sign of bullishness. Just like here with the pandemic. As soon as the 2020 pandemic bottomed out here, the equity hedging index rose to a significant level, then it peaked. We're starting to approach a peak here, guys, which tells me that we may have hit a bottom. Now, again, we got geopolitical issues. We got Germany's inflation. The European Union's inflation just came in at a record pace since 1948. They're going ahead and attacking the pipelines for Russia, and that's going to hurt them even more. There's a lot going on in terms of geopolitical, but this is a bullish sign here. Let me look at comments here. So I haven't looked into that. I have some Starbucks here. Excuse me. So I haven't looked at that. I read it somewhere, but I haven't confirmed it in terms of one of the Clintons. But that's really cool. So in division, so I'm the CEO of Al Stock Trades, so alstocktrades.com, and also I'm in healthcare as well. I'm a medical student, and I'm planning on becoming a neurosurgeon, applying for residency in about 2 years. So on the medical side of what I'm doing, I'm actually collaborating with Clover Health, and I'm writing a thoughtful analysis paper on a project that I'm working on as the physician side, the future physician side of me. And I really do believe there is a space for Clover Health. They're trying to do what physicians have honestly failed in doing, which is to tackle the social determinants of health, right? So I think they're doing a great job in terms of that, and we'll go into those later. Yeah. So again, so this is an important chart here. So what has so retail has been selling, dumb money is selling. So which smart money is buying? So I'm going to read these because I think we should, because this is great. We have Paloma here, and if I misread them, I'm sorry. I'm first generation here. I know numbers. I don't know English that well. 2.6 million. We have Vanguard, 22 million. Citadel increased their ownership by 600%, 13 million. State Street increased their ownership in Clover Health. These are Clover Health buys, right, guys? 41.15%. Every time I read this out, think of retail selling and giving them these shares. That's what's happening. Goldman Sachs increased their shares by 53.99%. They own now $5 million. We have Two Sigma Advisory. They increased their shares a massive 11,000%, more than 11,000%. Okay, guys? Now they own $16 million. We have another one, Two Sigma. They also have another portfolio, from my understanding. That's another $24 million. We got, let me see here. How the hell do you say that? Casalo or whatever. Casalo. They went ahead and they have 19. They started a new position, so they haven't increased anything. They increased their position by 100%. They started a new position at 19 million. We have Wolverine. Now they're at 600,000. Not a lot, but they increased by 200%. We have another 2,000% increase. That's almost $6 million. We have Marshall, which has a total portfolio value of $4 million, 4.6 million. This is what smart money is doing. We have Millennial Management increased by 190%. Now they own 6.4 million. We have Vanguard coming in with another 171% increase with a total of $105 million worth of Clover Health. We have Swiss coming in with 149.71% increase with a $2.4 million worth of shares of Clover. We have Hudson coming in, starting a new position. Now they have 5.55 million. We have Citibank increased their shares by 2,566%. Now they have $3 million. We have Capital Fund, which they have a total value of 1.5 million shares. I'm not done. We got BlackRock coming in with a 53.50% increase. Now they have almost $20 million worth of shares. We have Bally Gifford, was the first investor of Tesla, right, in the early stages, increased their portfolio at 51.45%. That's $17.2 million. We have Fidelity coming in with 118% increase. Now they own 10.28 million shares. Schwab with 129.94% increase, and now they own $5.6 million worth of Clover Health. Are you starting to get the point, guys? Dumb money is selling, smart money is buying. Very clear. So now let's talk about the put side. Well, we have, I'm not even going to go ahead and mention these people here, but I don't know what kind of name that is. They decreased the puts by 30.09%. Citadel decreased their puts by 53.9%. They decreased puts by 100%. Bluefin, they decreased their puts by 83.73%. Goldman Sachs, huge. They decreased their puts by 100%. Wolverine Trading, they decreased it by 13.80%. Forget this huge. I misplaced that huge. That's not huge. What the hell is 13%? All right. We have Walleye. They decreased puts by 100%. We have this company here decreasing puts by 100%. Jane Street, guys, people are starting to decrease their puts and buy shares. I'm not going to go over all this. You can read it. Okay. The Bank of Montreal decreased puts by 100%, but they increased shares by 3,880%. Exactly. So a lot of what, CNBC, Jim Cramer, a lot of what these people are doing is they're saying all SPACs are going to zero. All SPACs. Guys, listen, you remember when Jumia went down to $3, $2 because they said it was a freaking scam company, and then it went all the way up to $67. Now, I'm not saying that it should have gone up that much, but that's how the stock market works, right? I believe, what is their, Andrew Citron Research, what was the short selling? They're being investigated too, right? We have Bank of America decreasing puts by 43.35%. Look at this, guys. Look at this. It's very clear here. It's very clear. So, no, I appreciate that. And I wanted to compile this, guys, to give it to you raw, no editing whatsoever, trying to essentially, because I've been getting a lot of requests about talking about Clover Health, but big money's buying. So let me go ahead and let me go back to the chat group here. Let me read what's going on here. I agree. Good. Hey, bro. How you doing, Jordan? So where is this thing going? Do we get 20 this year? Thank you, Jordan. What is your short-term, long-term targets? Some SPACs kind of dumb that the people are allowed to buy in short-term. Oh, wow. I didn't even know you could donate to our channel the $5. That's really cool. I appreciate that. Thank you. Again, this is my first live stream, so I didn't know people could do that. That's really cool. Just so you guys know, any money that comes into this channel is going to be reinvested back into the channel. I'm going to be a doctor. I don't, I'm very blessed. So the point of creating this channel is to give back to retail, which is why we have over $22,000 of yearly subscriptions that are essentially broken down, and we have an artificial intelligence robot AI system in our Patreon group for $9.99 a month. Can you believe that? $9.99, under $10. We try to give back to retail, and you know what I mean? So any money that's invested essentially will get back into this channel, because unfortunately, no one's talking about the truth here. No one's looking up this. A lot of the YouTubers that talked about Clover Health, where are they? They're gone. Where are they? Anywho, so no, I appreciate that. Thank you. So let's talk about some problems here, right? With Russia, right? When did the institutions increase their positions? So the way it works, SEC 13F filings are backlogged approximately 3 months, right? We don't get to know. Back in 1976, Congress passed a bill, and they said essentially that anyone who owns a certain amount of percentage points on a company has to report. So these are backlogged by 3 months. So we don't know what we don't know what institutions are doing now. I know they're buying, and we have data to prove that. We have dark pool data to prove that. But let me, in fact, actually, before I show you, we go to Russia really quickly here. I want to show you something really cool. So this is our AI system here. We got stocks on the right, crypto and all that. But let me show you something real cool here. So let's look up dark pool command. So this is our AI system. One of our members here, they just using our bullseye and trading flow, they're up 26% within like 10 minutes. But let me go ahead and I'm going to show you some really cool things here. So I'm going to go ahead and let's look at Clover Health's dark pool data. So the beautiful part about our AI system is if you hit enter, this is only for $10 a month, less than $10 a month. If you look at Clover Health's dark pool, you're starting to see where they're buying at. So this basically tells me that, you asked me, someone asked me, when did institutions increase their positions? They have been increasing their positions for the past 3 months. And you know what's funny? They're also increasing their positions now because we have access to this. the dark pool levels for Clover, and there's a link down in there with our Patreon group, and it's attached to our Discord, and our AI system is attached to Discord, so you guys have your own mini Bloomberg terminal here. But you can see dark pool these institutions are buying right now, guys. So it's an unfortunate thing. Here is our other dark pool information as well that shows you what stock is essentially being bought out, how many shares, the amount. These are all privileged live information that we get to get an edge on Wall Street, which is unfortunate because nobody, this costs hundreds of thousands of dollars to get all this information. But again, my goal is very simple, is to give you all an edge. So let's go back to here. Okay, so let me just drink some water here. Let's see here. I'm guessing going to hover around 2 to 5. Okay, so someone asked short-term, long-term projections. Before we get into this here, so the short-term analyzing the stock market is very difficult. However, I'm going to go over some other graphs that I think would give us an analysis of where things might go. But I'm going to be creating an intrinsic value calculation video utilizing our intrinsic value calculator, which we offer at Mastering the Stock Market course. And what that is, guys, is it essentially goes 10 years into the future, discounts back at a 10-15% discount rate using a 2% perpetuity model divided by the number of outstanding shares. Long story short, let me give you, so what you can do is you can say in price target, CLOV, enter, and here's CLOV. So then we can have, these are all the stocks that I've analyzed. So as you can see here, guys, Clover Health is sitting at, we believe, we're looking at a $40 price target based off of the levels that we're at right now. However, in my next video, so I'm reading over the comments here, so I want to make sure I don't leave any questions unanswered. In my next video, I'm going to be adjusting the growth rates to match a 37% growth rate, when in reality, we know that Clover Health is going to grow approximately 80 to 85% at least in 2022. But I'm going to be a little bearish because I want to give the lowest price target as possible, so I know kind of where things. It's better to be very conservative, but it's very clear in the next 10 years, this is going to be at least a $75 stock. All right, so that's what we think. But going back here, this graph here tells you all of the these are all like, for example, Pearl Harbor. That was a devastating thing that happened to the United States. The Iraq invasion. These all dropped the stock market, the S&P 500. Like, look at Iraq. The Iraq invasion of Kuwait, it dropped the stock market by negative 16.9%. But then it recovered after 189 days. COVID-19 dropped the stock market negative 33%. It bottomed and recovered in 148 days. Pearl Harbor, which I think was really scary, guys, right? This dropped almost 20% and it recovered in 307 days. On average, guys, you have to understand, America is resilient. So this whole Russia thing, we're going to recover. So company can't grow 80% for 10. Exactly. A company cannot grow 80% for 10 years. But the beautiful part is, which is why in my next video, we're going to go ahead and analyze the value and we're going to depress it down to 37%, which is their growth rate pre-direct contracting. So someone asked me, well, what are we going to do for the Donald Trump Medicare policies if, let's say, if direct contracting and all that went away? Well, we're going to go ahead and calculate that price target. 37% growth is nothing to laugh on. That's really good too, right? But what we do, guys, when we do our intrinsic value calculation, we do it every 3 months. And the more information we get from Clover, the more we can project out, and the more essentially satellites we send out, the better I'm able to hone in on a price target, right? That's accurate, right? So It's old data, right? So yeah, we'll definitely. So I'll put that on our list. LCID on our ticker requests on our Discord here. Let's see here. Al, if all these institutions are buying millions, exactly. IAG IAGL 1219. The reason why that's an amazing question. I'm actually happy that you asked that. So because of this, that's the reason why. So IAGL asked, Al, if all these institutions are buying millions and essentially closing their puts, how come it doesn't go up? Because of the dark pool. That's the purpose of a dark pool. They're able to buy and sell shares, and it doesn't disrupt the share price. But we have access to this data. I pay a lot of money to give my members here access to this data so you guys can see what's going on. I mean, you guys are we're getting live feedback here in terms of stock breakouts and whatnot, of when a stock breaks out, literally live flowing. But the beautiful part is this dark pool that unfortunately is legal. It allows institutions to buy up millions of dollars worth of stock, but yet the stock price stays the same. And retail, not knowing any of this, not even reading Benjamin Graham's Intelligent Investor, Ray Dalio, Peter Thiel, all of these things, unfortunately, they get screwed over. All the money that retail got from their stimulus that they invested in the stock market, it went back to the rich, right? And now with inflation coming in, that's going to be Chapter 2 of the Intelligent Investor states that stocks tend to outperform bonds because stocks can price in and pass on the prices to the consumer. Eventually, retail getting screwed again, right? So, long story short here, regardless of what happens with Russia, I do not think Russia will invade, because Putin is very smart. No matter what we think about him, he's a smart man. He plays chess, and unfortunately, the current administration that we're in plays checkers. That's the truth. And so another thing this is purely speculation. I don't usually like to speculate, let alone speculate on a live. But think about this for a sec. There was a video of Biden coming in back when, in his prime years, in the 80s and 90s, coming in. And he said that we don't want to pull troops prematurely because it'll crumble the government. They know that. The guy's not an idiot. But if you guys remember, the United States brought the Taliban in power back in the 70s to fight Russia. Could it be that they wanted the Taliban to take over, perhaps, give them all this ammunition, maybe to control or defend Russia? Could it be? Again, this is me speculating far off here from the topic of this video. But there's a lot of funny business going on with the whole Russia development. But the thing is, Putin is a very smart man. I don't think he's going to invade. But if he does, understand that if there is a stock market drop, it'll recover. That's just how it works. Okay? So, here is the composite trend model reversal. This is essentially what I don't know if I should go over this now or go over it with a video. Well, you assume MCR gets better, revenue can... Oh, yes, MCR. Okay, so let's go ahead and let's talk about the MCR. So over time, the more Clover... Again, they just started being publicly traded, and the Clover Assistant was just recently created in 2018, I believe. 2017, 2018, correct me if I'm wrong. Over time, guys, Clover Health, Clover Assistant, through the processes of machine learning, which is exactly what we use here, these machine learning algorithms, over time, the prices and the cost per patient will ultimately decrease. So it takes unfortunate times, right? Bark sometime too. Here, I'm writing these down. So Lucid, and I can remember Lucid, but let me look at Bark here. Yeah, look at that as well. So there's another guy named Al Lau. So how you doing, my friend? I think we're related, right? Clover Health is a super fraud company aimed to steal people's money illegally. So pump and dump scheme in play with so this guy, I'm giving him attention, and now he's getting excited. So he's, right? I hope we can all laugh here, right? So grab your beverage and enjoy. So we're starting to get the I'm old school. What do they call these guys? Trolls, right? So everybody's welcomed here. Come in, enjoy, relax, and let's talk business, right? So in any case here, these claims are not backed by any. They're just backed by stock price. They're not backed by fundamentals. So we're going to go ahead and leave this graph later. But long story short, gold is seeing a reversal, and Russia has been buying a lot of gold in trying to deleverage itself from its debt to equity, right? So keep track of that. Crude oil and gold, keep track of it. So what's happening right now is gold is starting to come closer in crossing the 200-week moving average. The last time this has happened, it's outperformed the S&P 500. And the last times this existed was back in the 1970s, right? Remember the Paul Volcker era, right? And it also happened post-dot-com bubble crash / also the recession of the mortgage-backed securities and the downfall of the Lehman Brothers and Bear Stearns here, okay? So as you can see here, these are all, again, everything I bring you guys is backed by data. I'm an academic. I have 4 degrees. My 5th degree will be my medical doctorate degree. So I'm very data orientated here, okay? So we're starting to cross this line, and if it's sustaining these levels, ticker symbols like gold, GOLD, and other stocks could be a hedge for your portfolio. But unfortunately, by the time people talk about it, it's really over. People are selling out of these stocks that, like Clover Health, and that I think are going to increase by thousands of percentage points. So here's another good one. So both stocks and bonds have pulled back more than 5% from their 52-week high. Okay, so this is an unusual market, guys. Okay, this only happens 6 other times in 46 years. However, after similar movements in the past, these pull back. These essentially these pullbacks that we've seen, they rebound strongly with the bond market showing better risk to reward profile. But here's the thing, though. We are living in and again, this data is post 70s, right? It's right on the 80s, right? This data, there's a little bit of skewedness here, right? We are going to rally, that's for sure. I do believe we're next to a bottom, but check this out. We know that bonds show a better risk to reward profile, but when you have inflation, and I believe that inflation is unfortunately going to persist. I believe the Federal Reserve was late in the game, and right now they're just trying to sell off their balance sheet here. We know that from the Intelligent Investor, Benjamin Graham, Chapter 2, if you want to read that chapter to understand what I'm talking about. We know that stocks actually outperform bonds, usually about, I forget the percentage, probability of outperformance, but they do more than bonds, because if there's inflation, bonds actually get slashed and they eat through your returns, multiplied by the tax that you basically ensue regarding if you cash them in. Stocks, on the other hand, they can raise prices. They have pricing power. Essentially they pass on to the consumer. So hope that makes sense. And again, this whole stocks and bond returns, this only happened a few times in 46 years. So what we're experiencing now happened last time. It only happened this is the only times it happened. In the 80s, 1994, 2020, and here it is. So what we're experiencing now, guys, let me zoom in here. What we're experiencing now is relatively rare, right? That's why it's important to understand this. So here's another one here. Based on multiple spreads regarding S&P 500 incorporating within utilities, indicates this is a positive return of 83%, which has returned positive gains into the futures. This has only happened 35 other times in the past 68 years. Okay? Again, all the data that we're collecting is coming into the fact that we might actually see a rally by the end of the year, or maybe a huge rally by 2023, 2024, which ties into the questions that I'm getting here. Do you have a price target for the end of the year? So again, price targets are very tough to ascertain, especially in the current market that we're in, because there's other factors that we have to consider. Like, for example, in November, we have the midterm elections. I don't want to get political, but we like to go over all different types of kind of bearish moments that can happen. But I don't want to go too the politics here, but I do believe that we are going to see a red wave, and that red wave is going to help kind of block the Biden presidency. And the reason why that's actually good for the stock market, not good for society in terms of getting stuff done, is that the stock market wants everything to stay the same, so we can just focus on the free cash flow. So Elizabeth Warren has become like a Bernie Sanders. All talk, no action. In fact, I have a meme I have to show you guys. She was calling Elon Musk a freeloader, literally. And then at the end of her campaign on her little Twitter feed, she said, please donate $5 to help stop people like him. People that just donated over billions of dollars of their stock sales to a nonprofit, right? So I don't think Elizabeth Warren I don't think people are listening to her. She also opposed federal chairman Jerome Powell's appointment. And look what happened, right? Jerome Powell's in office, right? She's becoming a Bernie Sanders. People are starting to realize that this whole extreme polarity that we're living in terms of extreme left, extreme right, Americans are tired of this. We want to get things done. And that's essentially my answer on this. Okay, here, I think midterm is going to help big time. Yeah, the midterm, exactly. So the reason why I'm telling you all this, guys, because it coincides with the question that Mar-a-Lago, right? No, did in his end of year for the price target there. No, yeah, exactly. She's just, it's gotten to a point where it's like, I hate to say this, but it's almost like, oh my God, just can you just shut up? Like that's pretty much what we've gotten to now. Everyone's like, oh, here she goes again. I mean, these things are not helping. You need a free market, right? And Clover Health is essentially making, because we already know the government is a terrible allocator of money, right? That's why we're in debt. So let these private businesses run the show. They're smart. They know what they're doing. Very clear. So if I didn't answer your question, can you re-put them back into the comments? I want to make sure, ask any questions you guys like. So I want to go in and Yes, ER expectations. So I'm not looking for an EPS to be positive. If it does, great. I'm not looking for that. I'm looking more for if they beat revenue. And I want to know by how many percentage points are they going to beat revenue. I'm expecting them to make at least $1.4 billion in revenue for the total fiscal year. But if they make for 1.45, great. But I speculate, I think they're going to make at least 1.55. In fact, we might even see $1.6 billion, right? In terms of the fiscal year, not the quarter, right? In terms of the end of year price predictions, the revenue multiple for this company has gone anywhere between a 1 to a 9.7. In fact, it was higher, right? And with that, if you just apply that without my DCF models, I mean, we might even see a price in the medium term anywhere between $6 to $10. But from these levels, you're essentially doubling, tripling, quadrupling your money, 5 timesing your money at these levels. That's why I said the stock has been devastated. I believe Canaccord went ahead, and this is a good thing that we should be discussing this, just to give a price target. Exactly. Only real companies can stand. That's got that. Al, I agree. Maybe because your name is Al. Al, I agree with you. Only real companies can stand. Clover Health has no debt. They have enough cash for a year and a half, let's say. The coronavirus pandemic is dropping and leveling off in terms of its number of cases. They can always issue more shares, which are definitely going to be bought out by institutions. And I'll calculate when that might be. Let's see here. Cash burn. I think the cash burn will be a little high because we're backdating when we had that surge. So the cash burn might be a little higher. But they allocated a certain percentage in terms of raising cash to battle that as they have time to perfect their software. Just to give you guys a understanding here, because we have people like Al Lal, little clowns here. Al Lal. Let's go ahead and take a quick second here. Let's take a look at this here. Give some education here. So there's not a lot of data here, but there is data here. If you look at the financial health of Clover Health, they have a current ratio of 2.42. Now, what people don't understand what current ratio is can this company pay off their short-term debts in less than 12 months? And if it's over 1.5, in terms of Warren Buffett analysis and investing, yes, they can. It's a great company. Their debt to equity ratio, this company virtually has no debt. We want a company with a debt to equity of under 0.5. They're at a 0.06, right? And this guy's saying these numbers are fake. I mean, this guy's don't talk to Al Lal. He's a paid basher. Honestly, man, how much are they paying you? Should I switch sides, guys? What do you think? Should I switch? I'm just kidding. That's terrible. But just to give you some numbers, guys, here, okay? Just to give you some numbers here, because I like to combat stupidity with knowledge, right? If we look at Clover Health financial analysis here, we see the short-term assets can definitely pay down their short-term liabilities. And in fact, their short-term assets can also pay off their long-term liabilities. We don't want to see a company selling their long-term liabilities to pay off their, long-term assets to pay off their long-term liabilities. So, and also they just increased more cash now. So this figure needs to be updated, which is, I'm going to do that when I get the earnings report. So so there's that. So now let's go over this one here. So no one's really talking about this. This is a good one. Let's see. Let me just make sure I go over everyone's comment. I want to make sure no one's left out here. Oh yeah, in 2 years, we're gonna hit at least 20. I think there's no way. I mean, I'll be honestly surprised. I'll be buying more. Let's put it that way. Okay. do you think there's foul play in terms of friends? Aha, yes. So good question, Solaris. Good question. So this goes into nice segue here. Okay, so as you can see, if we look at the, it says here, smaller rivals snap up Medicare. So just let's look at this really quickly here. With a record number of MA plans available to seniors, many shopped their options during the latest annual enrollment period, and it created a retention issue. And this is Humana, right? They're saying that it created a retention issue. Cigna, too, said MA growth will be lower in 2022, according to the CEO comments during the JP Morgan Healthcare Conference. Right, and there were a lot of downgrades right after that too, in a certain company. I believe Cohen the Clown, and another one with a guy who has a negative, like negative 30% success ratio. They don't want Clover to win. The data speaks for itself. Let's go in and talk really quickly here. Among among all of these health-related insurance companies, Devoted Health and Clover Health saw some of the largest membership increases, right? Devoted more than doubled its membership. Clover Health saw a 25% increase in members comparing monthly enrollment from January 2021 to 2022. Okay? So here's a good one. So the apparent increase in shopping is noteworthy because prior research indicates, again, this is all research based here, MA members tend to be fairly sticky, which is true. That once they find a plan they like, set it and you're done. And they stay with the plan once they've selected it. The thing is that it's not to say that MA members never switch plans. They'll move if they sense there is a potential for meaningful savings, and Clover Health adds those meaningful savings. I'm going to become a doctor, and I'm telling you, we're very wary of insurance companies. Clover Health is not like that. They actually want to help the poor. They represent people of color. It's everything you want in an insurance company, right? So now here's another one here. We've seen the average number of plans explode over the past years, noting that the abundant plan offerings reflect that the profitability in the MA business market. So there's a lot of profitability in this market, and that's why Chamath is backing this company. And here's a nice graph here that explains kind of where Clover Health is at right now. Clover Health is doing extremely well, and once its AI technology starts to expand, we're definitely going to see some amazing gains. So I think we already spoke about this in previous videos. Here's the debt to equity ratio. Their debt's gone down and everything, but Al, enough is enough with him, right? So let's wrap this up. So let me go ahead and read some of the comments here. When do you think Clove will be profitable? Yes. Okay, so to answer that question, let's go here. Okay, so this is Clover Health's future projections. We use an algorithm that projects out until 2024. These are past projections. These are future projections right here. So this is the 0 mark. This is in millions. And again, you guys have access to all of this in our Patreon group for under $10 a month. I give access to all of this. This is expensive material. Unfortunately, retail can't afford it in terms of it's just not viable. I mean, you need to be an institution to ascertain all of this. We provide it all for under $10. We're pretty much any profit that is made will be reinvested back into the channel and into that Patreon group. And I will cap that price off at 10. I don't care how much inflation is. We want to be able to help retail out. So we believe that Clover Health might get their profitability in terms of their free cash flow by 2024. However, they always tend to beat. So I think with this whole direct contracting revenue, we might actually see 2023, but expect 2024, 2025. Okay, let's go ahead and see what I'm gonna leave this up here so you guys can see it here. Let me read the comments here. I hope my voice is clear. Okay, good. All right. We're going to talk about that in terms of the Russia impacting the markets. Look at Birchcliff Energy. Oops. I'm going to write that down here. Okay. I read all your guys' comments. You know what I mean? We try to build a community here and like a big family. We rarely switch insurance companies. Facts. Thank you, Pete. Exactly. Only if it makes sense. I mean, these are smart people. These are not like, oh, they're old and they're no. These are very smart people, right? These are the people that that taught me, right? So, in terms of investing and all that. So we rarely switch. I used to sell MA. I compared several MA side by side. October. There really isn't much to separate them aside from the Clover Assistant. Yeah, exactly. That's what's going to be separating them. And the beautiful part about that is, if that can decrease costs, the order of magnitude of that is significant. I mean, fine, let's just say they're going to be half of the market cap, I believe, of Humana. Well, that's $20 billion. You take 20 by that, it's 20x the share price right now. Alexa, 20 times 2.
20 times 2 is 40.
That's a $40 price target, right? Which is what we had, right? With our DCF. Historically, healthcare has been resistant to economic recessions, which is why I'm talking about it. Again, I have over 200 years of information and over 100 years of statistically significant information regarding the stock market. So we tend to really focus on stocks that are going to be great for the future. Okay, so here, Clover MA, 11 insurance leverage. Yeah, and what people are not factoring in, Solaris, is that Clover Health can actually, and they were asked this in the JP Morgan conference, Clover Health can actually go ahead and license this Clover Assistant platform to other areas around the world. This is where I'm going to tap in China. They actually have a tech hub in China designed to basically build this platform. Are we assuming that big guys don't use tech? Do we have any intel? No, yeah, the other guys use tech as well. But the thing is, the problem is, and I've actually spoken to a couple people regarding that are in the Clover Health market. The problem is a lot of these big guys, they don't really want to go into these markets. When I say these markets, unfortunately, there are markets that have been historically marginalized. So long story short, people that don't know this, we live in a unfortunate stratified country where the social determinants of health, we have social stratifications of class, race, and gender, meaning that I can predict your life expectancy based on where you live, your education level, and your race. The problem is we live in these areas where Clover is in. A lot of these big companies, they don't want to get in there because it's very sticky. It's difficult, as you can tell. It's a very losing business. But with the Clover Assistant and with their growth, they're able to capitalize on that. And then if they can go into other markets, they're able to take market share from Humana, from all the other insurance companies that we saw. And we've already seen that play out with a lot of articles and those other stock prices decreasing based off of the fundamentals. They've mastered the New Jersey market, and all they're going to do is they're going to have to replicate that in other markets. And it's very simple. It's very scalable. We do need a CFO. I agree. We do need one. Okay. Potential for the dilution capital rates. So that's it, guys, for this live session here. It was a privilege and honor to serve all of you. I wanted to do this before the earnings report tomorrow, and I hope this was helpful. Please comment, like, all these different types of things. Please subscribe if you haven't. And check out those programs that we have below, the Patreon, for the Al Stock Alerts, and you guys will get access to all of our analysis, all of our price targets. Here are our price. There are a lot of stocks that I don't talk about. Clover. There's a lot of stocks, guys. There's a lot of stocks that I've analyzed, close to almost 100. Like, for example, Mara, a $40 price target on Mara, which is a Bitcoin mining company. There's so many stocks that unfortunately we just I don't have the bandwidth to make a video on. So if you guys want access to all of our analyses, everything that we can do, our top short squeeze stocks, which today returned 83.49%, more than that, right? There will be more information in the link down below in the Patreon group. It's only $10 a month, less than that. And we try to give you guys the best information. You'll be able to get access to all of this information, social spikes, whether they're a bullish, bearish sentiment. There's just so much to discuss, and this would take 5 hours to go over. So let's put it there. So it is a privilege and honor to serve each and every one of you guys. In response to Al Lal, I've analyzed that as well. Again, I'm going to go into the field of neurosurgery, so we tend to be very analytical. We analyze everything. If you look up other health insurance companies, they've also been fined. In fact, some of them have been fined. I don't even know how they're still in business. So look at other companies as well, right? So, unfortunately, you can bring your trollness to other channels, but when you're talking to me, you're talking to an academic, not only in science, but in business. Okay. So, and once those two things merge together, it's really an unstoppable art. But all in all, it is a privilege and honor to serve each and every one of you. I read each and every one of your comments. I love each and every one of you. And God bless you guys, and please stay safe. All right. Thank you. Thank you.